Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, August 1st, 2025, the market is navigating a complex landscape filled with significant news and economic data points that are heavily influencing the Nasdaq 100, represented by QQQ. Most notably, President Trump's plan to hike tariffs on certain U.S. trading partners, effective just after midnight on August 7th, is casting a long shadow. This announcement is already impacting futures, with Dow, S&P 500, and particularly Nasdaq 100 futures showing declines, indicating a cautious or outright bearish sentiment for today's opening. Adding to this apprehension is weaker-than-expected third-quarter operating profit guidance from Amazon, which somewhat offsets the broader strong earnings season from other big tech giants. Furthermore, investors are on high alert ahead of the upcoming non-farm payrolls report. A hotter-than-expected reading could reduce the likelihood of a Federal Reserve interest rate cut in September, which would typically be seen as negative for growth stocks. Looking at the daily chart for QQQ, we can observe the overall trend has been broadly bullish over the past year, reaching significant highs before recent pullbacks. However, the past few days, leading up to today's news, have shown increasing volatility and downward pressure. Specifically, the candles from late July reflect this growing unease. Notice how the candle for July 31st opened at a high of 574.54, but then closed much lower at 565.01, indicating strong selling pressure throughout that trading day. Let's zoom into a specific period earlier this year to understand how QQQ reacts to sharp corrections and finds support, which might offer clues for the current situation. Here, we are looking at the period from early April 2025. We can see a steep decline from highs around 479 to a low near 402 between April 3rd and April 7th. This highlights a significant support zone forming around the 400 to 420 level during periods of extreme selling pressure, followed by a sharp rebound. The current pullback, while notable, has not yet approached these lower historical support levels. Now, let's switch to the 1-hour chart to get a clearer picture of the immediate price action leading up to today. Looking at the last 24 hours of trading on July 31st, we see a distinct downward trend emerging. From the high of 574.63 early in the day, QQQ steadily declined, closing the day around 565.00. This continuous hourly drop confirms that selling pressure was building well before today's market open and related news. This recent weakness on the hourly chart correlates directly with the increasing negative sentiment from the tariff news and Amazon's guidance, which likely began to seep into market expectations. The overall downward momentum on higher volume, especially towards the latter part of July 31st, is a bearish signal. Immediate resistance on this timeframe appears to be around the 568 to 570 area, where previous support failed to hold. A retest and rejection of this level would further confirm bearish short-term outlook. Moving to the 15-minute chart, we can analyze the very shortest-term price movements and the immediate market sentiment from overnight and early pre-market activity. The very last candles of July 31st show QQQ closing at 563.61, slightly below the daily close reported. This indicates that the selling momentum extended right into the market close. The significant drops and subsequent attempts at minor rallies within 15-minute periods highlight high short-term volatility. The current price action suggests that immediate support might be found around the 563 to 564 range, a level seen repeatedly being tested and slightly breached at the very end of yesterday's session. From a short-term bullish perspective, QQQ has seen impressive long-term growth, and any significant dip could be viewed as a buying opportunity, especially considering Nasdaq's strategic initiatives like enabling 24-hour trading. The support around the 563 level, if it holds on strong volume, could signal a short-term rebound for day traders. However, the immediate headwinds are considerable, leaning heavily towards a bearish outlook for the very short term. The looming tariffs, coupled with jobs report anxiety and specific company earnings disappointments, create strong downward pressure. A breach of the 560 level would indicate further weakness and could lead to a test of lower support zones, potentially down to 555 or even the 550 area seen earlier in July. In the long term, while tariffs are a concern, strong underlying technology growth and Nasdaq's own advancements like the agentic AI workforce and Nasdaq Eclipse platform could provide tailwinds. These operational improvements for the exchange itself do not directly impact the QQQ ETF's price in the short term, but they build a stronger foundation for the overall Nasdaq ecosystem. A truly bullish reversal would require positive news on trade, a soft jobs report encouraging Fed rate cuts, or unexpectedly strong earnings from remaining big tech companies. For now, such catalysts seem distant. To recap, key price levels to watch are the immediate resistance at 568 to 570. Should QQQ break above this with conviction and higher volume, a short-term bullish reversal could be in play, though this is less likely given current news. On the downside, critical support levels are around 563, followed by 555, and then the 550 mark. A decisive break below 560 on high volume would strongly reinforce a bearish short-term outlook, likely pushing QQQ towards those lower supports. The probability of further downside in the immediate term is high, perhaps 70 to 80% given the current economic uncertainties and futures data. Conditions that would reinforce this bearish view include a surprisingly strong jobs report next week, which would dampen rate cut hopes, or further escalation in trade tensions. Conversely, an unexpectedly weak jobs report, prompting the Fed to signal rate cuts or a de-escalation of tariff threats, could spark a strong rebound. Traders should monitor volume closely on both up and down moves. Higher volume on downtrends, as we've seen recently, indicates conviction behind the selling. Always remember to manage your risk carefully and stay informed on breaking news that could rapidly shift market sentiment. That's all for today on Explain the Charts. Stay safe out there.